thank you guys so much for coming to the investment support webinar series. This is our second installment with my friend Alan over here. And we're talking about investment readiness today. So we've got a couple of questions. Alan, would you like to do a brief intro about who you are and why you're here today?
Yes. So my name is Alan. As Hekla said, I'm one of the investment managers on the lending team at Big Issue Invest. We lend, so we're at the lower end of the scale within the organization, and we lend between anything from 20,000 to 150,000. And I've been with Big Issue Invest for 3 years now.
Right. And I guess why we wanted to do this session today is obviously investment and getting any type of funding right now is a huge topic. It always has been for us in particular, but some people are kind of new to the game, whether that be grant or repayable. And I guess let's start with, so an inquiry comes through our site, they're a social business. What do you immediately look at and how does that process start? Just for some people who haven't gone through it before.
Yeah. We have a form that basically gets generated from the website that then comes into our inbox, which doesn't have very many details about what the organization does or where they are. So initially we would just call the organization and from a very kind of top level, we would just then discuss what the organization does, ask a little bit about its impact, what its business model is, get some details on their income streams, and then ask about what the investment proposition is and how the investment will be repaid. So basically, initially, it's just a kind of 5-10 minute conversation as to why they're looking for investment and basically what they do.
Right, and so it's just really casual. It's kind of like a discovery chat to see how we can kind of take this person forward. And we were talking earlier, and our aim is always to be as helpful as possible. And I think you would probably find that for most social investors in the third sector, right?
Yeah, no, absolutely. We kind of always look upon it as a partnership, which I guess we may vary from high street banks, although I've never worked in one, but I've heard of people comment on rather impersonal, but we try and be far more personal, and we would sit down, and I guess part of what we're discussing today is investment readiness. And if there are things that the organisation cannot provide, then we would sit down and highlight any gaps that would be required for them to provide. And I guess we'll probably get onto this in a little bit more detail further on, because there are various grants out there that we can apply on their behalf for, allow them to get some resource to hopefully fill in the gaps, if there are any gaps, of course. Sometimes there aren't.
Yeah, of course. And like, it's always best to help somebody, because you never know if they can come back, or you're helping them put together their proposition, reformulate maybe their social impact and how they articulate it, and then either send them off or try to help them with
sorry, Hekla. Yeah, no, absolutely. I mean, we have a kind of list of requirements that we would ask for first conversation, which is around our due diligence. This would be things like business plans, summaries of how much money you require or they would require, what the investment would be used for, how it would be repaid. And as social investors, almost as important as being repaid is the social impact of the organization. And then we get into the kind of nitty gritty of it, the financials, and asking for management accounts, profit and loss, cash flow, balance sheets, and things like that, governance of the organization.
So why don't we move into like the next phase? So you've got the inquiry through, you've gotten a little bit of information about them, and then what kickstarts the due diligence, and what kind of documents are you asking for, and what are we looking for in like the cash flow?
Yeah, well, I mean, I guess the important ones initially would be around the financials, because we would have to see that they are a sustainable organization. So we'd have to be looking at, we'd also be asking for historical financials. So, you know, maybe going back 3 years so we can get a picture of the organization. Now, we understand that a lot of these organizations will be coming to us because they may be, cash flow might be getting tight. Some of the income streams have not performed as good as what they had forecast. And some may have net current liabilities. So the balance sheet will not be as strong as maybe it would be. And we do understand that a lot of the organizations that do come to us have already been done by banks.
Yeah.
So we have to get a better understanding as to why the organization, now this is not all organizations are like this. Some organizations will become to us with a growth strategy. They may be to purchase assets, whether it's property or machinery.
Right.
But some will be coming because they've hit a little bit of a buffer, a bump in the road rather. Need some input cash-wise to continue the business, to allow the business to continue to operate.
Yeah. And why don't we just talk about a little bit about if they can't provide you with a cash flow forecast, what then is our next step to prepare them?
The next step would be asking them whether they actually, you know, if there's anyone on the board that has a financial background, probably assist with that. But we do understand that a lot of these organizations are small. They don't have a finance resource. A lot of the skill set within the organization is delivering on the mission.
Delivering that becomes, yeah, of course.
Yeah, absolutely. So there's a fund called the Reach Fund, which is a grant which is specifically around helping organizations to buy in outside resource to help them provide things like strategy documents or business plans, any financial forecasts. So that would be the next port of call, would be trying to sit down with them and help them through this application. And the application is basically, we would highlight to them where we feel they are weak and what needs strengthening. And it's basically them providing the information to us that we then require to make an informed decision on whether this is an investable proposal or not.
Yeah, of course. And I guess talking about financial forecasts, if we're working, say, with a consultant, how far are social investors or just anybody in general looking for you to project? And maybe talk about some of the use cases that we talked about earlier where
I mean,
realistic.
We don't actually, we wouldn't work with the person. They would be working with a financial consultant. Generally, absolutely 1 year. I mean, when you start getting down 3-4 years in advance, it is just that, it's a forecast.
Yeah, it's just kind of shooting in the dark that far ahead.
Yeah, absolutely. But the next year would be absolutely important. And then what we would do is we would always compare that to previous historical financials. There might be a reason why something's happened, that they haven't performed as well this year previously, and that's why they're seeking investment, and we understand that. But we are also looking for forecasts that are achievable. You know, some organizations have come to us and forecast, you know, threefold increase in turnover within 3 years.
Yeah, which is just not realistic.
And a lot of times that's not realistic. So what we have to look at is
unless they're really early stage, then that probably
yeah, absolutely. Yeah. And you know, some organizations have done that, but the organizations don't. And we're not looking for that. We're not looking for you know, huge growth in the organization. What we're really looking for is an idea that they will be able to repay the loan. What they're projecting is in line with previous years. So, you know, if the organization has grown 5, 10, 15% each year for the last 3 years, have an understanding that the growth pattern is going to continue that way. So that's really what we're looking for.
And when we're talking to new clients, are we looking at past debt? Are we contacting people that may be on their board, just to be sure that this person can handle taking on repayments, has been able to service debt in the past?
Yeah, we'd always look at the balance sheet, and we would always see what the creditors is looking like. So if they have any term creditors, and whether they can afford to take the debt on. Generally, there's one contact, but we would also, if it's a charity, then it'd be quite kind of look to maybe speak to the chair of the trustees.
Yeah.
And part of the due diligence process around the governance is getting a file of each of the board members of the organisation.
Yeah. Also, just to be clear for everybody on as well, for most grant opportunities, you do need 2 signatories and 2 people on your board at least, just to show that you're locally rooted, you've got some governance in place, and it's not just solely reliant on you. Have you seen any businesses come through our inquiry line, Alan, where you think probably aren't, they're not ready because they don't have enough signatories?
Not, I mean.
And how long would that process take for them to get somebody on their board, do you think?
Where organisations have got into trouble previously is where it's kind of one man or one woman organisation. You can understand it in the early stage. So maybe part of, if we approve that, it's not a reason we wouldn't approve a loan, but a condition precedent within that loan would be having some more side help in the organisation, and that would be around governance, getting maybe 1 or 2 non-exec directors onto the board. But it's certainly not a reason why we wouldn't. But our experience is that those are the organisations that tend to run into trouble just basically through resource, because everything is falling on that person, no one to help them, and that's when they get into a little bit of.
Yeah, of course. And before, I just want to make clear for everybody, if you've got some questions, please put them in the chat, because we'll roll into question and answer pretty soon. Probably one of my last questions is, at what point would we say no to somebody? I know that probably rejection is something that people have heard from high street banks or other investors, and just to hear your thoughts on that.
Well, the good news is I have said no to very few organisations.
You say no to nobody. That's the best.
I don't know whether that says more about me or the quality of applications we'll be getting. Sometimes an organisation is too early stage. One of the things that we look at are the income streams and whether those income streams are sustainable and sustainable for long enough to be able to take on repayable debt. Others are, if the organisation has come to us too late, already in a bit of financial difficulty, and we feel that even if they took on the loan, the issues that are there currently would still be there 6, 7, 8, 9 months following the line. And some of them are basically around the legal structure of the organisation, which is how they're performing. But some of the funds we have, we are restricted on the types of organisations we can lend to. So there has to be, which are generally charities, community benefits.
Sorry, Alan, can you say that again? Because you cut out.
Okay. Some of the organisations we've had to turn down are due to legal structure. Only lend on our biggest fund, we can only lend to asset-locked organisations. So those are charities, community benefit societies, and KICs.
Yeah. And the reasoning behind that is just because as social investors, we need to make sure that the money is being, all the profits being put back into the social mission and the purpose.
So we're set up specifically to help social enterprises, because probably other organisations could go and get small business loans from banks and things like that. But banks, for some reason, have been traditionally quite reluctant to lend to social
Yeah.
or charity.
And why don't we talk about a little bit of the flexibility of going to a social investor versus going to a bank or any other source of funding?
Yeah, well, as I said earlier, most of them have been turned down by banks. So we have to look at, we're looking at the same information as banks always do. And we can offer that flexibility to help the organization. So we kind of look at it as a partnership.
Can you just list those out?
We do understand.
So just
Sorry?
Management accounts.
What's that for? What we need?
Yeah, I'm just saying, just list them out really quickly for all of those that might not have been in the beginning of the call.
All right. Okay. So, the due diligence, the information that we would need would be historical accounts, maybe going back 3 years, management accounts, which would include your profit and loss, cash flow, balance sheet, and any forecasts, maybe 1 or 2 years ahead. But as you were saying there, the flexibility of us against maybe high street banks is that we can give repayment holidays. I know that a lot of banks at the moment are giving repayment holidays to organisations around COVID, but that's something that we've been doing since I've joined. So we understand that organisations may hit some cash flow issues at some point. So we can give them interest-only periods. We can the term of the loan, and that would obviously then reduce payments. We can also lend them a little bit more money if that's what's required. Just some working capital to see them through. And if we can see that this is a hiccup and they need some working capital to work through this, we can also reduce the loan to them as well.
Yeah, of course. And also, you've talked before about creating facilities, kind of almost like an overdraft, where if your investee is paid in the areas of, say, like 90, 120 days or something like that, then they're able to dip in and out of that facility, repay us, and draw back that money again.
No, absolutely. A lot of the organizations, what they actually do need is an overdraft facility. So they might just have cash flow issues and they need to get through the next 4, 5, 6 months.
Yeah.
But a lot of them, with the banks that they're banking with, they're not allowed overdrafts for some reason. So I think it was a couple of years ago, I had a charity approach me who were delivering DWP projects.
Right.
And they were having to finance those projects up front and they weren't getting repaid until 4, 5, 6 months down the line. But they did cash to fund that up front. So they approached, we basically came up with an idea that was basically something similar to an overdraft. So they could draw down a certain amount, which was predefined, up to £20,000 each time. They could repay back at any time, had that facility over a year. And over the year, I think they drew down 60,000 in total at various points in the year. And then by the end of that year, that was all paid back.
Yeah.
And they had said at the time afterwards, when I spoke to the chief exec, that if it hadn't been for that facility, it's unlikely they would still have been operating today.
Yeah.
So, and we can come up with some suggestions and ideas that can hopefully help the organization.
Yeah. Why don't we talk to also this idea that if I don't have a high margin business, then I probably can't get finance.
We're not.
Why don't you talk about some of the clients that we see on the day-to-day basis and how kind of tight their cash flow is?
Yeah, we're not really interested in margins, and we're not really interested in organizations increasing turnover year on year. We're just looking to see whether they're sustainable, whether the income streams are continuing to come in, and whether finance is affordable. So it kind of depends on how much they're looking to borrow. But if it's in the cash flow that can be repaid, some of the organizations that we've invested in, the balance sheet is really weak. They've got net current liabilities. But if we can get to the bottom of why they got themselves into that situation, and they have a clear plan on how to get themselves out of it, and we believe that's achievable, then absolutely we will invest, which I have done.
Yeah. And in a lot of cases, we've also tried to help partner some of our investees with a grant bid writer to help them get some injections of cash as well.
Yeah.
And yeah, it's just about creating a better picture for those social businesses and helping them become more sustainable by themselves.
Yeah, no, absolutely.
On grants as well.
Yeah. And then obviously, as we mentioned before, we've applied for the Reach Fund. I think we have had approved about 140 grants over the last 3 years, which has all been around investment readiness.
Yeah. Why don't you talk a little bit about that process and how we kind of connect them with a consultant, and what that really does, that kind of brings them back into.
Well, I mean, part of the problem is they might have the in-house resource, but they don't have the time.
Yeah.
Because they're so involved in the day-to-day. So we can get them a little bit of grant money that allows them to take a step away from the day-to-day. The organisation isn't losing any money. And during the due diligence process, when we've asked for the business plans and the strategy and all the other financial documents, if there's some gaps there that they can't provide us with that information due to resource restrictions, that's when we would apply for that grant. But we always ask them whether they are working, if they know any accountants, if the accountant that maybe audits the organisation.
Yeah.
Try and get someone from that local area from where we are. I mean, we don't recommend people to them, but ideas and suggestions as to where they might find someone.
Yeah. And also, why don't we talk to this concept of not being able to articulate your business or your social mission?
Well,
kind of the storytelling thing that we were talking about earlier.
Yeah, I mean, a lot of organizations feel quite intimidated about approaching investors, and feel they may not have the ability to write a business plan or a strategy document or things like that. But, from 5-10 minutes speaking to someone, and they can have a clear vision of the organization, we can have understanding that, yeah, they know what their business is about. They have a plan for it, and that's a plan we believe in. And that's just basically then getting someone in who can help them draft a document, a business plan. We have it down in print, and we can have that for the files. But we're not looking, like I mentioned earlier, we're not looking for kind of PhD level of plans or anything like that. As long as they've got a clear plan for the organization, articulate that simply, then that's all they need to be able to do.
Yeah, and I think a lot of people that come through our doors, or via online, not really through our doors, they...
Not anyway.
Huh? Not now. Definitely
not
now.
Anymore.
But a lot of the people are so focused on delivering social impact or being with beneficiaries or something like that, that they don't really have time for any of this peripheral stuff to even to approach investment. And so I think that's kind of where we open our doors and try to make it as accommodating as possible, and say, hey, we understand what it's like to run a business. We understand that you have no time, but let us help you inch along the way.
Yeah, I mean, I think that's one of the strengths of the big issue. Everybody, I think, knows all the big issues. So we're coming from a social enterprise by ourselves. And as part of the due diligence, we will always go out and visit the organization. So we will meet the people that are running the organization, and we will hopefully, if some of the beneficiaries are around, so we can have a chat with them. So we kind of just get an understanding of the organization and what they're doing and the people that are involved in running it.
Yeah. I just want to open this up for questions. If you guys have any questions about finance that you're trying to apply for at the moment. We do know of bounce back loans. We would highly recommend anybody to try to refinance the current debt that they've got, because bounce back has 2.5% to 50 grand, which is great for small businesses.
Sorry, Hekla. Yeah. Can I just jump I don't. I think we discussed previously, but I don't think we discussed before, which might be someone's question about the cost of borrowing.
Yeah.
So the cost of borrowing for ourselves is normally around 8%. And that is, well, it depends what the organisation's like, but that is probably higher than banks. But our loans are unsecured, which is reflected in that. And there's normally a 1.5% arrangement fee. But what we always, or I always do, and most of the team do, is when we speak to organisations, is we advise them to have a look around and see whether the funding is available cheaper. But as I mentioned earlier, a lot of the organisations that do approach us have been turned down by banks. So unfortunately, the bank is not an avenue that's available to them.
Mm-hmm. And also, you talked about being the junior lender on some deals. Sometimes we'll shop for them.
Yeah. So if an organisation is going to try and purchase a property, generally we would do that in partnership, maybe with a charity bank.
Mm-hmm.
And because the organisation doesn't have a deposit, we could be the provider of the deposit.
Mm-hmm.
We would be the junior lender, and then that helps them buy the property. And then hopefully at some point further down the line, when equity has been created within the property, in a position to refinance that on a cheaper loan, because the loan to value ratio is then obviously decreasing as the property is increasing. So yeah, we've done loans with partnerships before in situations like that.
Right. Is there anything else that you think you want to cover, Alan? Those are all the questions that I've got for today. That is it. Thanks, Alan, so much for talking to us today.
No problem.
I hope it's been helpful for everybody. I'm sure it has been. And we'll see you in the next webinar that will be on Friday this week at 2 p.m. One of my investees called Invisible Cities, the founder, Zakia Malawi, will be walking us through how she's been managing her business through this time and what she's done with her support network and also with her employees. So you won't want to miss her. I think she'll be sharing some pictures and stuff like that as well. So thank you guys for coming, and we'll see you soon.
Okay, thank you. Bye.
Bye.